us mull that one, but also get you back into the market. Chris Conway from the Australian Stock Reporters live in our Melbourne studio. Chris, that theme, and welcome to you, that investors are now being saddled with the outlook. It's hitting home, as we were saying, just off the back of that GDP release yesterday, which kind of was portraying it in an economic sense, but from a corporate perspective, how do you trade this market with that theme upon us?
Good morning, guys. Yes, thanks, Carson and Ingrid. Look, I think the only move really now is to look for opportunities to the downside. As you mentioned in the lead-up, there's some troubling outlooks out there for companies. That theme is clearly weighing on the market today. More importantly, however, is that the index has crashed through some support, some strong support, around 55.80 through 5600. That seems to have given way, and this is something that I've been saying for quite some time now. If that region was to give way, and I always thought that it would, then the next point of support for the market doesn't arrive until around 5400. So I think there's probably another 100 to 200 points in the move lower, and of course, as I said, that means that traders in particular should be looking for opportunities on the short side of the market.
All right, so where are you seeing those opportunities on the short side? What sort of stocks would you be shorting right now?
I think the big one right now, and it's not a secret to anyone, would be to sell the banks. From the longer-term investors that I've been speaking to, clients, they're not in a hurry to buy the banks at the moment. They're waiting for some more compelling value, and traders that I've been speaking to are wanting to short the banks because you know, the trend is clearly down in the financials. I think the financial sector took out its recent lows as an index, of course, took out its recent lows, and that now is in a downtrend. And banks very much seem to be on the nose. So that's the big one. Conversely, if you're looking for things to buy, I think commodities are finally starting to look okay. There has been some consistent commodity price increases. We've seen iron ore, I think, reach a 3-month high overnight. And of course, we all know the story with oil as well, which has also been performing quite strongly. So, yeah, it's the old sell the banks, buy the miners.
What do you say to people, though, that with these falls, you know, even on your call, they're yielding 5% again, which implies an attractive premium if you go into that space versus cash, when that's very much the live, you know, debate. You know, fixed income v, you know, what you're getting on that yield story.
Yeah, look, certainly, Carson, that's an interesting point, and look, it's all about finding the tipping point. Banks won't fall forever. We can pretty much guarantee that unless there's another GFC. And there will, of course, be a point at which they become particularly compelling, again, from a valuation perspective. I don't think we're there yet. And again, that means opportunities for traders on the short side. And those who do have a longer-term focus, that it's just a matter of waiting. It's about being patient. My message to clients at the moment, it's a little bit cheeky, but it's don't be a hero. There's no reason to be gobbling up stocks at the moment. I think clients will get an opportunity to buy things when they become cheaper. And it's about picking the spot when that happens.
All right, Chris, I want to talk Metcash as well. We've been obviously discussing it on the show this morning, off 16.25% right now. How much sort of hope do you take from the fact that management is sort of trying to clean up the balance sheet? You know, they've done this write down now. What is it going to take for Metcash to sort of reinvent itself, in your view?
Yeah, look, some solace should be taken from the fact that management has made the tough decision to suspend the dividend. Obviously, they want to pour money back into the business, shore up the balance sheet, and of course, looking to sell their auto division to generate some cash is a positive as well. I personally think that the horse is bolted for Metcash, though, in the sense that, you know, you look at the ongoing price war between Coles and Woolworths. Throw into the mix that Aldi is, you know, taking market share hand over fist, and I just don't see where Metcash fits. I don't know what their competitive advantage is. I don't think they do at this point either. For an end consumer, they're too expensive. They don't have the network of stores that the other grocery retailers do, and they don't have as strong a supply chain either. So, yeah, whilst the moves are positive from management and could lead to some steadiness, I guess, in the company, I don't see how they come roaring back. It's certainly not a stock that we would be buying or advising our clients to buy. And in all honesty, probably further downside is on the cards before it turns around in any significant way.
So you don't see, no, maybe a trade buy, well, not only a trade, but a Woolies style interest in the hardware part of the business with the supply chain across the Tasman, that economy looking pretty rosy relative to everything else. and so you've got exposure there. You've got the potential to kind of hedge against an exit from lows on your register for masters. So rather than a kind of a wholesale exit, you can still have skin in the game via MITRE 10.
Yeah, look, interesting point again that you made, Carson. Certainly they could be looking to sell assets. I wouldn't call that a wholesale turnaround in the fortunes of the business. The other thing that I suggest that they could do is position themselves differently and become, from the grocery side, become a high-end grocer, become a niche grocer. I'm not sure whether you guys have the chain up in Sydney, but Leo's down here in Melbourne is a high-end food grocer. Does particularly well. They've selected their stores appropriately in high income or high net worth areas, and they do exceptionally well. But again, in terms of IGA and in terms of Metcash, I just don't see under their current model how they have any competitive advantage. I think they're not competing on a price point perspective, and they're not competing in terms of convenience either. So there's no compelling reason to walk into their stores.
Just quickly put this in context for us. What's your view on the sort of Wesfarmers Woolworths trade? Are you still seeing any value there?
Woolworths, no, not really. I think, again, the risk is to the downside for Woolworths. Wesfarmers, in our opinion, would probably be a hold. Not a trading opportunity, but a good solid company that still continues to perform. So that would be a hold in our opinion. So, again, it's a difficult environment. The Australian consumer is very discerning these days. We have seen that wage growth in this country is anemic, for lack of a better word. And people are being very, very selective about how they spend their money. They're not willing to pay top dollar for a product or a service that they can get, cheaper somewhere else. So a very competitive environment. The big boys, it's like the miners. The big boys will always survive and continue to prosper. And of course, you've got Aldi nipping at their heels as well from a price point perspective, who have come in and gobbled up between 5 and 10% market share and continue to grow and are going to launch aggressively on the west coast of the country, having obviously done quite well out here on the east coast. So, yeah, a very competitive and difficult environment.
Yeah, it's kind of intriguing, therefore, because as you say, when you talk about cost consciousness, to then be opening the door to maybe a high-end offering in fruit and veg and all the rest of it in consumer staple land seems pretty heroic. But then again, the other end of the spectrum is a race to the bottom on price, and then it's all down to volume.
Yeah, a good point again, Carson. It would be heroic. In that sense, though, as I made the point with Leo's, I think it would be about selecting appropriate store locations. Yeah. They're a troubled company. They're obviously selling already or looking to sell off parts of their business. They could sell some of their network of stores, keep the stores that they think are going to perform well, change themselves into that high-end grocer and compete on that front, because they're not competing on any front that I can see right now that's going to, as I said, result in a material turnaround in the business.
I just wonder how much market there is for that niche.
Well, indeed. And then, for instance, you've got a Harris Farm bang next door to an IGA in a shopping centre, say at Mossman. What do you do there? Yep. They'd be battling, till the death on that one. Anyway, intriguing.
All right, Chris, we will leave it there. Thanks so much.
Thanks, guys.
Chris Conway there.